Whether you're investing in your first fund or your 10th fund, it's very important to know that the assets that are being purchased by the fund and what the cash flow profile looks like from day one. We've been very successful over the past 10 years of buying properties, fixing them up, and then getting top of the market rents and getting these properties cash flowing well. Here are some examples of how a real estate fund can take advantage of cash flowing rental properties. One example of this was a 14-unit property in Laramie, Wyoming. This property was in a prime location near the University of Wyoming, and we were really excited when we purchased this property based on the opportunity of raising rents. So we knew where the rents were currently at, we knew market value, and we also knew where we could start to stretch the rents to based on supply and demand. It was really exciting to see our team get in there and fix up some of the properties and then get our property management team in place and start to find the most high quality tenants that were the best fit for this property and ultimately get that property cash flowing at its maximum value. The second property is also located in Laramie, Wyoming. This was a 2-bedroom, 1-bath house that we converted into a 4-bedroom, 2-bath house by simply finishing off the basement. As we can really scale and bring in more single-family properties just like this, it really helps the overall health of the portfolio because these single-family assets are a little bit more diverse from multifamily, and they're super stable. And when you do need to go to dispose or sell these single-family properties, they're very marketable. A third example is a property in Sheridan, Wyoming. This was a single-family house that we converted into a duplex. And this property, just as it stands alone as a duplex, brings in great cash flow. But one of the reasons why we're so excited about this property is it's on a very large lot that has the ability to carve out extra lots and build other structures. So if we are to go develop this property down the road and add, say, another duplex or add a couple other single-family houses, this is going to 2 or 3x the cash flow on the property and ultimately increase the asset value of this particular property. One of the biggest upside of this fund over the next 4 years is to apply forced appreciation at scale on multifamily properties. So take this 63 unit, for example. There are 16 units that are currently not bringing any revenue. As we go in and invest capital and fix these units up, now we bring these units online and increase the cash flow. That really just multiplies over 4 years. And again, it's going to increase cash flow and going to increase the overall asset value. So the heart of this real estate investment fund is the cash flowing properties that we're bringing in from day one, and then the forced appreciation from a large multifamily property. The other big upside, though, is the timing in the market. So if we start to see a macroeconomic downturn and property values do continue to drop, that brings even more value because our team is designed to go in and find those properties, fix them up, and stabilize them. So if we can buy at the bottom, we lock in our profits to where that is just extra value at the end of the fund. The way we've set up our fund is so that the limited partner and the general partner's interest align. The limited partner is paid a 6% preferred return that is generated from the cash flows of the property. Then at the disposition of the fund, once all the properties are sold, the general partner and the limited partner will share profits in a tiered system. So if this real estate fund feels like a good fit for you based on the cash flowing performing properties and the forced appreciation, I encourage you to reach out and set up a discovery call. For new investors, we always encourage you to hop on a discovery call so you can ask any questions you may have and we can discuss the fund further. And if you're an existing investor, you have an opportunity to also hop on a weekly call to discuss this fund or other opportunities.